A truth can always walk naked, but a lie always needs to be dressed. Good evening and welcome. This is Face the Nation. What is the truth behind the IMF engagement in Sri Lanka? Is the agreement being dressed by the political hierarchy in the country? To discuss all this and more, we've invited three guests to our studios this evening as well. Joining us this evening on the show are Sujiva Mudlige, CEO of PwC Sri Lanka, Dr. M. Ganeshamurthy, Senior Lecturer, University of Colombo, Pasan Vijayawardhan, Economist at the Advocata Institute. These three gentlemen will be joining us this evening as panelists on Face the Nation to discuss about Sri Lanka's engagement with the IMF. All joining us tonight to pose questions to our panelists. On to my immediate right is Attorney at Law Sharan Benedict. On to my immediate left is is not attorney at law, but good as an attorney, Nadim Majid, as well as Shania Darigama, posing questions to our journalists this evening on Face the Nation. You can direct your questions to 076 656 5353. Let me once again tell you the number. It's 076 656 5353. We'll be delighted to take your questions to our panelists this evening on the show tonight. So let's get the ball rolling with Sujiva Mudlige, CEO of PwC Sri Lanka. What are your thoughts about the recent development that has unfolded in Sri Lanka with regard to the IMF?
So thank you for having me today, and thank you very much for the invitation. So interestingly, the delayed approval of the IMF program, which we expected the end of last year, has now been officially communicated and approved by the executive board. So which is a good thing, and I think we must congratulate and especially three people: President Wickremesinghe, Governor Nandalal Veerasinghe, and also Secretary of the Treasury, Mr. Mahinda Siriwardana. So that's one headache which was where we were not sure. That can be sort of ticked off. So I think the important thing is we know very little about the commitments what we have made so far. And interestingly, this staff level agreement and what they call it, the staff report and also the executive director's report for Sri Lanka was released yesterday. It has 155 pages. And interestingly, you can just imagine the status of our country. I was watching your news today, right? And in fact, they had a debate on this, right? And your news carried about 15 minutes of that debate. I can assure you that none of the 225 members would have read this book. And they wasted one full day today debating the conditions, commitments, and what assurances have we given. Doubt it very much whether they had the time, because these are released yesterday. 160 pages, they would not have the time. Most of them, even if they had the time, wouldn't have understood, knowing the caliber of the politicians we have in parliament at the moment. So that's point number one. Second point is that all this time, President Wickremesinghe is the only one who kept on saying that we are a bankrupt nation. And he in fact went on to say that he doesn't even have a recovery plan, because it's no point having a recovery plan, because it's in such a state. So that has been confirmed by this report, where they have basically said we are a basket case, right? So that is the second thing that we need to note as far as after this report was issued. And the third thing is they have clearly said the program objectives, which there was some discussion on that. So they have identified 5 points on this, right? First one, restore macroeconomic stability, number one, right? Economic stability. And that's what President Wickremesinghe has been eternally saying. It's economic stability, and economic stability. So that's point number one. Second one, debt sustainability. And we all know our debt is not sustainable. Third one, how do you look after the poor and the vulnerable, the social security net, what they call the SSN, right? Safeguarding financial sector. So they have clearly mentioned here the status of our banks, right? Strengthen governance. And this is the first time I was told in this part of the world where actually IMF have clearly stated that they need to review our governance structure because there is so much bribery and corruption. And in fact, they are giving us technical assistance and a team to sort out governance. I mean, just imagine, right? And that's the status of our country. So that's why we say it's a basket case. And what needs to be done on the medium term growth potential. So that's the third point. Fourth point is that there are a lot of areas where we didn't know before, or we were not sure whether those were actually part and parcel of the IMF discussions. So one is clearly, we can talk about it later, is that it clearly talks about local law debt restructuring. It's called LLDR, right? And it's in two places in this report. I think we need to talk about it, right? That's number one. And second one, they have clearly identified 4 institutions that need immediate restructuring on the SOE side, right? That also we'll talk about what needs to be done on the SOE restructuring. And also extensive discussion on what needs to do on bribery and corruption. I think this government has done a lot of good things, but one thing that they have not addressed bribery and corruption, for whatever the reason, right? Maybe because of the political instability, because of maybe there are other priority areas, but IMF have clearly said that's a key area of focus. And one other thing that comes out is we have given, and one other important thing I think we need to say is there is a report which we have given which identifies the reasons for this crisis. We were all talking about, we all had our own viewpoints, and a report by Mr. Subramaniam, Executive Director for Sri Lanka, and Mr. Chandranath Amarsekar of the Central Bank have said these are some of the reasons, right? Very interesting. In 2022, Sri Lanka experienced the worst socio-economic and political crisis in post-independent history. And what are the reasons, right? First one, and they say, events that unfolded since 2018 included the constitutional crisis. That's one of the reasons, right? Easter Sunday attacks, second reason. COVID is one reason. A third reason, considerably weakened the Sri Lankan economy. What else? Grave policy missteps that included unsustainable tax cuts, continued money printing and monetary financing at a prolonged period of low interest rates that caused excessive monetary expansion, flawed pricing policies for petroleum products, electricity and other public utilities, ban of chemical fertilizer, and defense of the exchange rate. Who is saying this? This has been said by the central bank. Mr. Chandranath Amarsekar is an official of the central bank, he's a director of the central bank, right? Together with the Mr. Krishnamurthy Subramaniam. They said these are the, in a high level, these are the reasons for the crisis. So when politicians come and tell you, right, they say no, COVID, and COVID. COVID is 1 out of 8 or 9 reasons. Right? Multiple reasons for where we are today. So I'll leave it at that, but there's a lot to grasp. Neds, I think you need to have a chat in about another, month's time where everyone has gone through this from cover to cover, because there's so much, and we have committed ourselves. There's a lot of growth projections given, how we are going to manage our expenditure, what our revenue targets, new taxes, be careful, right? We'll talk about it later. And so that's my initial remark.
Right. So before I move on to Dr. Ganeshamurthy Sujeeva, I have a question to pose you. You've been very negative over the last few months with regard to the government actions. You've said even the IMF bailout package will take some time and it won't come as expected, as we've been speaking about this right throughout. Now we've got the first tranche almost to our hands. What are your thoughts? This is very positive, isn't it, in terms of the government and the people of Sri Lanka? But you seem to be very pessimistic.
No, not
Why?
really. No, I'll tell you. I think you must as I said in my initial remarks, you must congratulate President Wickremesinghe, Governor, and the ST for getting this signed and getting the executive board approval. I think there's no doubt on that. I think we all need to congratulate the 3 of them. The concerns I have on this, right, is there are so many commitments that we have made, right, over the next 4-year period, and to what extent, right, and to what extent we can honor these commitments. I'll tell you what the IMF says, right? They say program risks. Risks to the that is why I am pessimistic on this, right? Risks to the program implementation are exceptionally high, given the complex debt restructuring, unfavorable external environment, elevated risks of persistently high inflation, challenging political and social situation. Given Sri Lanka's weak track record of reform implementation, the program runs significant risks of slippages regarding fiscal consolidation, revenue mobilization, and reserves build-up. It also talks about social unrest, talks about fatigue. You know, people have been fatigued with reforms because every month you need to be ready. You would have something that is coming up to the so-called tightening of your belt. So there is fatigue, right? So this is why I am saying excellent, well done. I think we must congratulate everyone who was involved. But we need to be careful that we don't slip up on our commitments.
So it's not about going out there and lighting crackers and celebrating that what we've got, certainly.
So interestingly, now there was lighting of crackers yesterday. When we got the IMF in 2019, when we said we don't want IMF, that we will not take any further foreign currency loans, also there were lighting of crackers. So it's the same people. This is like the same politicians who are in parliament, right, who have voted for 17th Amendment, 18th, 19th, 20th, 24th. They just, you know, so that is the status of our country.
Thank you very much, Sujeev Mudlige, CEO of PwC Sri Lanka. I now move my attention to Dr. M. Ganeshamurthy, Senior Lecturer, University of Colombo. Dr. Ganeshamurthy, let me ask you a very direct question. Now, Sujeev spoke about the IMF report that has been out right now, and it's in Parliament, and it's in the public domain now. This report itself is 152 pages, almost touching the 160-page mark. If we went to the IMF last year, would the number of pages on this book reduced?
I don't think so, because the problems that are in Sri Lankan economy, they were almost there for so many decades right now. Fiscal side, we had all the time the negative fiscal balances, and debt sustainability also. Most of the time that was in serious question. Our external balances, most of the time they were negative, at least the current account balance. So even though we went to the IMF for 16 times, and each and every time the IMF has given certain recommendations and guidelines to follow, most of the time these guidelines were slipped when the economic recovery or something growing positively in the economic domain, due to public agitation also, maybe a part of the reason, Sri Lanka was unable to continue with these reforms. So this time, whether we have gone earlier to the IMF or now, it doesn't make a big difference. But the only difference I will see, if we had gone to the IMF in the 2020, some of the conditions would have been relaxed. But this 160-page document may be reduced for a few 10 or 20 pages. That's all. But at the same time,
but the cost of the report would remain as it is.
Yes, because this time the report is so comprehensive and touching each and every area, including good governance, corruption, and normally we don't see this type of non-economic objectives are put in part and parcel of the IMF program.
When you look at this report in question, Dr. Ganeshamurthy, it's very evident that it speaks of 4 major state institutions, state-owned enterprises: Sri Lankan Airlines, Ceylon Petroleum Corporation, Ceylon Electricity Board as well.
And Road Development
Authority. However, yesterday we saw in the midst of all this happening, all these developments taking place, the Sri Lankan government decided to sell their shares at Sri Lankan Airlines and Sri Lanka Telecom, which are profitable in nature, which is Lanka Hospitals for that matter. Why is this decision taken?
The justification as given that in Parliament, I think once this same question was raised, and they say, whenever you dispose this to loss-making institutions, only the loss-making institution you are selling, maybe the buyers may not be interested in that. So, state properties, actually the government's role is to govern, not to run businesses. So that may be the reason why they are selling the government's share in these profit-making entities.
So Lanka Hospitals and Sri Lanka Telecom
mainly, and also there is a social side of it. Now, electricity, petroleum, water supply, and these are essential services, actually a backbone of a society. And if these institutions were privatized, there can be social repercussions. And when you privatize these things,
right.
But so therefore, in many countries, and social scientists always say that these institutions should be possessed by the government, because these are public good in a way.
Thank you very much, Dr. M. Ganeshamurthy, Senior Lecturer of the University of Colombo. We now move our attention towards Pasan Ujewardana, economist at the Advocate Institute. Pasan, let me also pose a question to you, so we give some direction to the show tonight, so we know exactly what we will be talking tonight in terms of the IMF engagement. Let's look at IMF engagements elsewhere in the world. Example, Lebanon for an example, Zambia for an example. These countries went to the IMF even before Sri Lanka went to the IMF. However, Sri Lanka was successful in a period of 12 months to secure this particular staff level agreement in question. Isn't this a major victory for Sri Lankans?
Yeah, thank you for the invitation, first of all. Right, I think it's not the major victory, but it is one of the victories that we have taken. I think the main reason why we were quick in this process is we felt the hardship in a thorough way, not like other countries, the political unrest and different kinds of economic problems, as well as that social unrest. People have started strikes and everything. So I think government felt, not only the government, the people felt the hardship in a mega scale this time, not like the previous times. Actually, if I'm not mistaken, in 2000 there was a minus economic growth in Sri Lankan context, and during that period also we went to the IMF and we recovered soon, right? But the thing is, even though Sri Lankan government has entered to the implementation of these recommendations given by the IMF, continuation of these recommendations was the major problem. That is the reason why we have failed in the last 16 times. So, however...
But they say 17th time is the charm.
Yeah, I'll explain. In the 17th time, there is a little bit difference, not a very big difference. Here we are moving to a EFF, that means Extended Fund Facility option. Right, earlier in last few times we have gone for SBA option, right? So generally under EFF, the loan amount that will be lending will be limited only to 3 years. But if the country's situation is too much worse, in such a situation, right, IMF will decide to lend the loan throughout the 4 years. Now actually, since country's situation was worse, right, IMF has decided to give 4-year loan, right? So what is the speciality of what is the difference between this SBA and EFF? We have to repay this EFF loan within a period in between 4.5 years to 10 years. That means we can repay it until 2032 as well. It's comparatively a long-term loan, right? So I think the burden of this IMF loan is little bit smaller with compared to the previous loans what we have taken from the IMF. However, at the moment, there are three groups in the society who are commenting on this IMF approval. So the one group is actually, some of the people are saying that, yes, some of the people are observing this in a very optimistic way, as you mentioned. People are celebrating the IMF approval and they are overloaded with the happiness. That's the one group. And the other group is, right, some of the people are totally pessimistic and thinking about the IMF approval in a negative way. Their main argument is they think that this is just another loan and this is an increase of the debt burden.
Like bodies like Advocate are
yes,
of the same opinion.
Yes. However, with all these things, some of the people are at the middle center or middle line, and they are saying that yes, there is a good side as well as bad side as well, right? Now, for the people who are
like Sujiva.
yeah, neutral, right? So some of the people who are saying it is totally pessimistic, I don't agree with themselves, because this is not just a loan, because with the loan, with the fund, we receive the international trustworthiness and everything. Now, for an example, I'll give one example, right? In 2023, according to the IMF report, the gross expenditure of the government was reported as 11.7 trillion Sri Lankan rupees. And gross income of the government, it is gross value, 3.4 trillion rupees. So the gap between the gross expenditure of the government and gross income of the government is 8.3 trillion rupees. So 8.3 trillion rupees is a very big value. Now with the IMF arrival, what has happened, right? We got a certain kind of a platform where we can restructure with our credit partners and go for the extension of the loans, right? So this time we have extended the duration of the repayment. Thanks to that restructuring, we got an opportunity to reduce the gross expenditure from the government end. That means now the gap is little bit gradually decreasing. Gradually decreasing means definitely need for going for more loans in future will reduce. So in optimistic manner, we can take it. But the thing is, if we repeat the same thing what we have done in the last 16 times, also in this 17th time, this will be again same failure.
I want to open the floor for questions from our journalist, Attorney at Law Shahan Benedict, Nadir Majid, and Shania Darigama as well. But before that, I would just want to pick Pasan's brain on the recent statement that was made by Ranil Wickremesinghe, saying, the president of the country, saying, we are not a bankrupt state anymore. What does that mean? Now, we declared bankruptcy last year. Just because we got the EFF fund facility, does that mean that we are not bankrupt anymore?
Yes, I don't think, so I'm not totally agreeing with that statement, but there may be a rationale behind that one in President's dimension. But however, one of the reason might be because of the restructuring processes. We have extended the time duration of the repayments. Up to certain extent, we have reduced the requirement of taking more and more loans. That may be one reason. On the other hand, President said that we have reached to an excess of $7 billion of US dollars from different organizations.
That's not true, is it?
But I don't know, are there any kind of a source for the president? But according to IMF report, yes, according to IMF report, they mentioned that after approving this IMF, after giving this executive board approval, the World Bank, Asian Development Bank and bilateral lenders are ready to lend around 4 billion. Around 4 billion. So 4 billion.
Precisely, the number stands at approximately now 1.7 billion, if I'm not mistaken, from the World Bank and the ADB.
Yeah. So including the bilateral lenders as well. So however, 4 billion from that one and here 3 billion, altogether it's 7 billion. But I don't know how President is saying 7 extra billions from somewhere else, but we have to check on the source. However, this loan also will be given within the 4.5 years.
So this is not about celebrations at the end of the day, is it, Pasan? Because
Yeah.
now we are lighting firecrackers for 3 billion. Ukraine probably must send a rocket to the moon because they got 15.6 billion.
Yeah, so let me to explain on that one actually. So one of the discussion that we had earlier as well. So this is not a time to celebrate this because we have lots of arrears in the loans. Let me to explain the statistics found as we had discussed. Page number 28 in the International Monetary Fund report, it says that the total amount of the sovereign arrears to foreign creditors was reported as $2.7 US dollar billions at the end of the year 2022. Let me to show the breakdown. The Paris Club, okay, 349 millions of US dollars. Non-Paris Club, that means for countries like India, China, okay, for those countries 425 millions of US dollars. And also for the, all the commercial creditors, China Development Bank and others, for all these commercial creditors, we have to pay 1,978 US dollar millions. Totally 2.7 US dollar billions have to be paid in future as well. But as the
that's the amount that we've defaulted on so far.
Yes,
That's
at
the
the
amount
end
that
of
we've
the
defaulted.
2022.
Yeah, that we've defaulted on so far.
Yeah.
Now the thing is, in the next 4 years, we're going into a IMF program. In the next 4 years, well, up to 27 May, we still have just ISBs. ISBs alone, starting with April this year, there's almost $6 billion that's in ISBs that's maturing.
Yeah.
Those, do you feel that we'll be in any position to repay any of that, given that we're only getting 4 billion or 7 billion?
Yeah, from this.
We only have access to 7 billion in total in financing. That leaves us, and of that we have 6 billion to pay off just as ISBs in the next 3 years. That's stuff that's to come, maturing in the next 4 years. There's also, as you mentioned, another billion or so just ISBs, commercial, that's there. So when will we achieve, because that doesn't sound sustainable to me, when will we achieve debt sustainability?
Yes, actually. As Mr. Sujiva mentioned at the very beginning, the delay is the main reason. If we not delayed, actually, the Dr. Vijayawardena and all the specialists pushes government to go for the IMF in 2019 December. But we have entered to this one in 2022 April or March or somewhere else, right? So because of this delay, this problem was grown and grown and grown.
So
That's the main.
when will we be able to, as Shami said, I mean, you're bankrupt until you start repaying your debts, right? So when will we be in a position to start repaying all of this? Like, for example, do you think that the 1.25 billion that's coming due 18th of April 2023, will we be able to pay that? I don't think so.
We also don't think so. So according to my personal perception,
Because we're getting 350 million, 330
we don't have to
million.
pay that, right, Sujiva? So we don't have to pay that. We don't have to pay that.
But I mean, you don't have to pay that right now. But that what I mentioned, that 6 billion in ISB debt only, not anything else. That's not going away.
No,
so it's
when
just
it comes to multilateral, correct me if I'm wrong, Sujiva, when you speak about multilateral donors and bilateral donors, the multilateral donor agencies like the IMF, World Bank, ADB, and any agency per se, those debts have to be repaid in order to ensure that the debt is sustainable, right?
Correct. So we have no choice on that. So
we don't have any choice on that.
So even right now we are paying.
Yeah, we are paying that.
Even right now we are paying. So I think, as Najib mentioned, so we have every year anything from 6 to 7 billion for the next 5 to 6 years. I think President also mentioned that number, I think, right? He said up to about 7, I think. So I think I need to just, I have a slightly different point on we said, is it something to celebrate, right? It's not. I'll give you some statistics, right? So this was put out by Verity Research yesterday. If you look at the ones, who are the others who got this executive level approval, who went to the IMF in the recent past? If you take Lebanon out, which is a, real
almost a failed state.
Total mess up there, right? So they have not got it even after 300 and IMF. That's 348 days outstanding after the staff level agreement. right? So it's 1 year gone. Let's look at other. How long did our one take? 200 days. Right? We signed off in September. No?
Yeah.
September, October, November, December, January, February, March. 7 months, 30 days, 210 days, 200 days. How did the other countries fare? Jamaica in 2008, 49 days. Greece in 2010, 7 days. Cote d'Ivoire, 2011, 38 days. St. Kitts and Nevis, one of the Caribbean islands, 55 days. 2011. Jamaica, 75 days. Cyprus, 42. Grenada, 104. Ukraine, 27 in 2015. Mongolia, 94. Barbados, 24. Ecuador, 18. Less than a month, right, these countries. Suriname, 237. Zambia, 268, just recently. Argentina, 22 in 2022. Sri Lanka, 200. If you take the median excluding Sri Lanka, it's 46 days. We took 200. Why? Because of what President himself says, we are bankrupt and we are a basket case. There's so much of complications on our debt sustainability. IMF simply cannot sign off on that. That's why this took such a long period of time, 200 days.
What are the complications specifically, Mr. Mudrige?
Yeah, so the issue is this. So one thing is, say IMF signs off, we have not discussed the local debt restructuring, so that's a major issue. Second one is our high budget deficit. How do you sustain? He gave the numbers on a gross level. Just imagine, right? This is staggering numbers. Expenditure 11 trillion, income 3 trillion at a gross level, 8 trillion deficit. That is like your expenditure is say 110,000 and your income is 30,000. 80,000 deficit at a gross level. So that is the issue. So how will someone, IMF needs to know, I mean IMF is like a bank of the last resort. We all go there when we are in trouble. That's why we've gone there 16 times. Keep in mind, only 9 times we have completed the cycle. 7 times we have not. So virtually 50-50 we are. Right?
Doctor.
So that's why I said, you got to be a little bit cautious on this. Because for you to go through this entire cycle, there's a lot. We'll talk about it later. What we have done so far. And what are the ones that we have committed, we have not yet done, which we have given days. So there's a lot to be done.
But just to add to that, so when asked about how we're committing to these social safety nets, I think Peter Brewer and then Nozaki, who are the mission chiefs in Sri Lanka, they sort of said that, okay, only 40% of the allocated money is actually going to poorer families, whereas the rest of the money is going to, wealthier families. So already there you see a break in the commitment to social safety nets. Can you clarify, okay, you also spoke about the high risk nature of the agreement. So what are the implications of, not keeping to this commitment, because the success of the agreement is very target based?
Absolutely right. So I think the important question is on poverty, right? If you don't tackle poverty, all these people will be on the road forever, right? I mean, now you have a few people for tax reforms and so on. I mean, but if not, just look at this. This is right, page 73 of the IMF report on poverty. So their poverty line is $3.65 a day. That is about 1,000 rupees now, at 300 rupees now, right? It's about 1,000 rupees, which is the international threshold for lower middle income countries, right? World Bank estimates, right? But 25.6% in 2022 is in that bracket, 1/4 of the population. So if you don't bring in that social safety net, what they call the SSN here, you're in serious trouble, right? Then they also go on to say, existing inequalities have widened. As the World Bank report shows that consumption has declined, and among the bottom 40% of the population, quite rightly mentioned by you, right? Compared to a decline of only 7.1% for the top 60%. So top 60% decline is only 7%, right? And for the bottom is much more, so it's far severe. So if we don't address this, right, that's why they say the domestic risks are severe. including social unrest.
Dr. Ganeshamurthy,
Nadim, on the same subject, on page 32, Sujeva, it says, one important priority of the program is to protect the vulnerable from the impact of the crisis and policy adjustments.
Yeah.
So how do they wish, or how do they envisage that the government do this?
It's a super question, right? I'll give you why this needs to be done. If you take today, Samurdhi allocation is about 50 billion. I mean, I think viewers need to know. Do you know how much people get on Samurdhi as per this report? Shocking.
few thousand rupees.
2,000 rupees. 2,000 rupees.
For a month.
For a month, they can go and have 2 chicken kottus.
No, I think their bus fare to and from
To
the
collect it.
Samurdhi office would be 2,000.
If they have to take a 3-wheeler to go, done. You have spent that amount to collect the 2,000. You have spent it on 3-wheeler fare. So, so that is why these vulnerable communities have to be protected. If not, all of us are in trouble, right? And so
Sujeev, I think Shafi's question was how.
How do you do that? So the important thing is this. That is why you must. My view is this. The vulnerable communities, first thing has to be, you have to identify them properly. You can't be on the Pradesh Sabha and that MP's list. That's one of the IMF conditions. And they have said within 6 months, by June they are going to do this. And that list will be digitally available, electronically available. That is number one. Right?
In public.
In public. So maybe only government, because I don't think it's fair for the others to know whether you are a Samurdhi recipient or not. But government agencies will know. So that's first one. Identify them properly, right? Number one. Number two, don't subsidize so that everyone gets it. What did we do when we subsidized diesel for everyone? Who benefited? I benefited. I run a diesel vehicle, right? I am getting it at 150 rupees and I consume, say, 200, 300 liters a month. And the poor guy who is running a hand tractor will be using 50 liters. To safeguard him, I am consuming far more. So it's crazy system. Stop that immediately. Give it a cost-reflective pricing, number two. Number three, do a cash transfer. You have to get it through a cash transfer. Today, Samurdhi, believe it or not, 40% is admin cost to give this 2,000 rupees. 40% is admin cost. Imagine in a day and age where everything is done through this. We have enough banks, rural banks, finance companies, all these things are there out there in the villages. Why can't we give it 40% of the allocation out of the 50 billion goes for admin costs to maintain the Samurdhi officers who are all political appointees, right? And to pay for the Grama Sevaka, then you have to stay in a queue the whole day to collect. You can remember that 5,000 rupees during COVID? There was calamity, shouting, screaming. So to answer your question is, it has to be a cash transfer. What is a cash transfer? You identify them and say, right, individual A will get this amount, and you send it as a, so then that person has the choice. Do I want to use it for diesel, or do I want to buy school books for my kid from that sum? Now you can't, because you are saying, no, I am giving you as a diesel subsidy. Or
what I don't understand,
subsidy.
what I don't understand is, Sujeva, now today in Parliament, President Ranil Wickremesinghe went on to say that he can only speak with the creditors, both multilateral and bilateral, and the private bondholders, only if the Parliament is prepared to accept the IMF report. Does that mean that the government in policy has not accepted the IMF report in question and it's only being tabled now? And after the IMF gives its approval, and only then can the President implement these proposals? Is that the feeling that you get as well?
No. Yeah, so there are, good question, 2 points on this. One is, I am not sure as to what was disclosed at the cabinet. Whether all this information, all these commitments were made, that information was shared with the cabinet when they initially approved, when these were submitted to the IMF, I don't know. That is number one, right? Number two, still that letter of intent has not been, today it was not tabled in Parliament. What is called LOI, right? Which either would have been signed by President Wickremesinghe as Finance Minister, or ST would have signed it. We don't know who signed it, but that was not tabled, right?
Wasn't the
and
letter
then
of
the next
intent
one is, I don't think this, the governing party knew what these 15 conditions. He was always talking about these 15 conditions. No, I don't think these people knew. But the question is, there may be a requirement from IMF saying, get this sanction from Parliament.
Yeah, but Sujiva, he also goes on to say in this speech in question that he would give the Parliament until the 3rd week of April to approve the report. And only then could he engage in the second round of talks with the IMF.
So probably then IMF would have given time, saying that we are going to sign off the executive approval on the 20th or 21st, right? And then I'm giving you 1 more month till 3rd week of April. You get it through Parliament, do whatever the deliberations, the debates, whatever that is required.
Parliament anyway has a majority in
I
Parliament.
agree. So I think it's just
Formality sake.
saying that, you know, I mean, it will be approved.
And I think at the end of the day, a lot of the people who were blaming the crisis on COVID will be the same ones voting for this report, which says that this is caused by policy missteps.
So this has now to be approved. No, so I think they will all approve. And so it's interesting to see what would the opposition do on this now.
Yeah.
Because certain parties said...
On those, and Dr. Ganeshamurthy, this is the question that I wanted to ask you, because I think that whether you belong to the groups, either of the 3 groups that Pasan was talking about, whether you're in the celebrate IMF, pessimistic about IMF, or neutral about IMF groups, I think we all have to agree that the contents of this 150-page report are entirely accurate. Isn't that so? I mean, what they list as the causes for the crisis, the policy missteps. True, COVID was also one of the causes. That among the external shocks being COVID and the crisis in Ukraine, but also policy missteps that were made domestically. It mentions the fertilizer ban a couple of times as well. So I think that as an entire nation across the political spectrum, whether you're communist or capitalist or somewhere in the middle, I think we all have to accept that what the IMF has laid out here as the causes of the crisis is entirely accurate.
I think it's an eye-opener, because, you know, the politicians are used to say that, you know, COVID-19 has been the root cause of everything, you know, putting other things under the carpet and blaming the COVID-19 only. But this report has clearly outlined the major causes without, you know, I mean, when you look at these causes, list of causes, it is impartially listed, those things. They didn't hide anything. The question is whether these are accurate or not, because the IMF uses the internationally agreed methodology and also the data gathering methods and things like that. So I don't think that this identification of these problems and also this the parameters, I don't see any wrongdoing or kind of a malpractice or kind of a exaggeration. I don't see. But these the 7 listed reasons are well known to the public. And the Sri Lankan people, Sri Lankan policy in policy debates, the academics and the think tanks and others, they keep on saying these are the reasons for this the collapse. But the IMF now came and outlined these are the reasons. This may be an eye-opener to everyone.
So so as you said, the reasons that have been listed, no one can dispute. The causes of the crisis cannot be disputed. It's there in black and white. And as you said, the people are also aware of what caused the crisis, and to a great extent, who caused the crisis as well. Where do you stand on the solution that the IMF is putting forward to us now? The access to funding. So we have $330 odd million that will come in the next month or two.
No, one or 2 days.
The next weeks, let's say. And then we have access to, this year, a further 1.7 billion from multilateral agencies. Is this going to be sufficient for us to dig us out of this hole? When you look at the 4-year program, the extended fund facility that the IMF, this is the bitter medicine that everyone is talking about. When you look at the bitter medicine, so we now have the prescription. When you look at what's here on this prescription, do you think this is enough chemo to get rid of this cancer?
Medicine has been given by the IMF.
Yeah.
right?
So
The
now we have
medicine
paid.
only.
Yeah.
But after taking this medicine, you have to take those good food and other nutritions
Yeah.
by your own.
Yeah.
So I don't believe that this amount of money which has been given is meant for repaying the debt. It's not for that. This first tranche has been given, and I think it has been given to the ministry, not to the central bank. Usual practice is giving this to the central bank, put into the reserve
But this
account.
time around, Dr. Ganeshmurthy, the money can be used for budgetary financing
Exactly.
as well.
Exactly.
As well.
So it is.
This is the case now across the board. Whenever the IMF gives money, they also give money for the budgetary financing as well.
Yeah. So it is, as we discuss here, the vulnerable groups and also the poor segments and vulnerable groups, and they have to be looked after, because IMF programs were always painful, and the vulnerable groups are the most affected.
How will this impact the ordinary Sri Lankan? Because the biggest question right now is, Dr. Ganeshmurthy, exporters are being battered now.
Yeah.
If you take a look at the last 2 weeks, how the rupee has been appreciating and depreciating, it's hideous. You cannot even come to a proper conclusion on an analysis as to where the rupee is going to stand by the end of the month. That's how chaotic business has become today.
Yeah, there are two sides of this. One is this is a kind of a speculative attack. This speculation is going around when the IMF loan has been approved, then everything will be so resolved. So IMF has been considered as a panacea for everything, some people. And others believe that the rupee is going to land in a kind of a strong 200 or 180 margin.
Would that happen? No, because Fitch rating is saying...
not immediately.
Fitch is saying that it will further depreciate by 23% and end up at 390 by the end of the year. So I'm trying to figure out, when someone else in the government ranks says that the rupee is going to come down to 180, 200 rupees, and then when Fitch is saying that the numbers are going to be at 390, who are we supposed to believe?
Well, this particular bitter medicine is given. If you cure the cancer and expand the economy, and rupee may be landing in that particular 180 margin, but not immediately.
But Dr. Ganeshmurthy, when you look at, so for example, you look at Fitch's sort of forecast, and then you look at the IMF's growth projections in this report, because they're saying we're going to contract by another 1.5% this year as well.
Yeah.
Maybe grow by 1.5% in 2024, and then in the medium term, we'll have GDP growth of maybe around 3%. That doesn't sound like the kind of economic expansion that's going to bring the rupee to 185 to 200.
Exactly. Now, for me, the government policies, since the beginning, this has been this particular crisis has been caused by the supply side factors, not because of the demand side factors. What the government has been trying to do, squeeze the demand side and get the stabilization, and then go for the growth projections. But when you have a demand side medicine for a supply side problem, you can't manage with that.
No, but the point is, Dr. Ganeshmurthy, you can give a bitter medicine to a patient who is ill.
Yeah.
But you can't kill the people who are around that patient.
That is true.
What is happening right now. Right now, they are treating one aspect of the country's economy and trying to ignore all the other aspects, like the exporters. Now we are well aware that this agreement very clearly articulates that import restrictions have to be lifted. The moment import restrictions are lifted, we are going to go back to square one. Vehicles will be coming from Japan, because Japan is also going to be one of the donors in the long run, and their ask would be open up.
That is why it is said that this is not going to be a kind of a easy walk. It's extremely difficult.
Let's say import restrictions are lifted. Dr. Ganeshmurthy, let's say import restrictions are lifted, and we are getting this 1.7 billion from our multilateral donors, and then we'll probably, as Pasan said, we might get another 1 billion if we are lucky from our bilateral donors as well. So that comes up around 3 billion. So when we are contracting the country's economy by putting up import restrictions, and that is why the country is doing well, isn't it?
Exactly.
The moment we lift it, we will go back to square one. And that means that the rupee against the US dollar will further depreciate.
What we are trying to say is we are well off by saying that we are contracting our economy, making it smaller and reducing the imports and controlling inflation, that we say we are fine, we are stabilized the economy like. But once you've taken the loan or the already taken loan, then you have to repay. In order to repay, you have to expand the economy. Without expanding the economy, you cannot repay the loans. So this is where the risk falls.
Hassan, I want to actually ask you, because we know that the Advocata Institute is pro-trade liberalization, right? So on this issue of import restrictions, a lot of the restrictions that were initially imposed have been lifted. There are key restrictions that are still sort of in place. But as Shamil says, the moment these import restrictions are lifted and let's say cheaper alternatives start coming into the market, consumers are going to start opting for those alternatives, right? And when that happens, the rupee is going to depreciate, because I don't see our exports magically rising up within the next month or two. And we know that the lifting of import restrictions will happen in the very near future. Is that correct?
Yeah, so I want to add something, and I totally agree with the doctor as well. So imagine, and also we should not forget, we are in a country with 3 consecutive negative economic growth consisting quarters. So we had experienced 3 consecutive quarters with negative economic growth. So we are running and we are doing all these activities within this scope and within this context. So it is not an easy walk. However, I can remember our governor has already said that we are going to remove these restrictions on the imports, but not as a bulk. It will be a gradual process. Firstly, we will be removing some of the restrictions imposed on the raw materials of important SMEs and some of the industries. So the main objective at the initial stage will be rebuilding the industries. So even though it will be a removal of import restriction, okay, then that impact, there will be a very big impact on the growth of the industries, and it will be positively impacting on expansion of the economy.
So if that's the case, Pasan, who do you believe? Do you believe the minister who says it's going to come down to 185 to 200, or do you believe Fitch's figure of 390?
I believe the Sri Lankan context actually.
You believe that by the end of the year, you believe that by the end of the year, the Sri Lankan, the value.
Not the end of the year, but the program is planning to complete by.
Oh, you're saying by 2027?
Yeah.
Okay, I think the minister went by the end of the year.
However, we should keep in mind we will be not receiving any kind of a money amounts as a bulk at once. Okay, at this moment we will be receiving 333 or 333 dollar millions, and as well as that, even the World Bank, Asian Development Bank, bilateral lenders agreed to lend another $4 billion of US dollars. That amount also will be distributed within these 4 years. So I don't think that there will be magical solutions.
But the problem is, Pasan, now when Ajit Niwat Cabral was there, when he brought the US dollar against the rupee from 200 rupees to 340, people started blaming him, saying he just took off the pedestal of the currency, and now there is no guided principle for the currency. As a result of that, the currency was depreciating at a steady rate. Now, Nandalal Veerasinghe is also doing the same thing.
No. Nandalal Veerasinghe is doing that very smartly. Now assume, I want
to... How is it being
Let me explain.
Now suddenly you all have changed gears.
No, let me explain.
Now also playing to the government's gallery.
No. We are talking about the theories. So let's say I want to wear this blazer. Okay. There are steps, no. Firstly, I have to wear the undergarment, then t-shirt or shirt. Okay, then after that...
That is how you dress a lie. Now, when I started off the show tonight, I said, a truth can walk naked, but a lie always needs to be dressed. So when you speak about this blazer and the undergarments and all that, that's very evident.
Okay.
That's very evident.
Okay, let me listen.
That's what the Advocata Institute is also doing.
No.
That's Shamil, do you want person to walk naked or something?
Okay, that's my personal opinion.
Yeah, okay, about the dress, okay. Get back on the dress. I want to know.
Just to wear these...
Undergarment, you wear the shirt and then you wear the
What I wanted to explain is there are steps, okay, to do something. Now, what Ajit Divat Cabral, the previous governor, did was he make this flexible suddenly without following each step. Now, there are steps. We have to firstly tighten the fiscal policy, we have to tighten the monetary policy, and we have to make sure we have enough reserves within the context. So, what Nandalal Veerasinghe did was he followed all these steps one by one smoothly and moved to the flexibility and create the flexibility in the exchange rate.
So, but this report in question on page number 32, it very clearly says, greater exchange rate flexibility will facilitate external rebalancing and rebuild reserves better, or rebuild a buffer at the end of the day. So that clearly says that we have to take off the guiding ceiling on the exchange rate, right?
Yeah, we had guided exchange rate system as well.
But right now, if you go to the black market, Pasan, you are selling dollars at 311 or 330 at government banks. 311 is the buying rate and the selling rate is at 330. If you go to the black market, they are selling at 350. What does that mean? So that means there is still a demand for dollars in the country's economy, isn't it?
Yes, there may be with the so if import restrictions removed, that means this situation might increase
that
as
is
well.
why Nadeem asked you that question before, Pasan. This is temporary, isn't it?
Yes, of course. That's why I asked government to remove the restrictions only in terms of industrial development only. So if we...
You're saying after some time the government will have to walk naked on the roads.
No. Just on the consumption expenditure, actually when we see the composition of these imports, okay, the majority is covered by the industrial imports and all these startup related imports. No. Okay, the consumption imports are limited only to 20%. I don't think that at the moment we should go to really remove the consumption imports. So that is not necessary at the moment.
That is mentioned in the report.
Consumption imports?
Yes, the IMF report says import restrictions have to be lifted.
Then of course government have to rethink about it.
So you have not read the report, no, Pasan?
No, that part I miss it, definitely.
Sujiva, I want to pose this question to you as well. The government's the forecasts on currency, 185 to 200 or fixed 390?
Yeah, so just to give you a bit of background, so what page 52 gives you a little bit of background on to what government has done so far, right? So it says, in response to the sharp currency depreciation and pressure on reserves, government has taken certain foreign exchange controls. What are they? These measures include import restrictions, multiple currency practices, and measures constituting capital flow management measures under the fund's institutional view, right? Imports of many non-priority, non-critical goods are suspended, which help to contain the import bill and relieved balance of payment pressures, but also hurt economic activity and distorted the markets. It's important, right? It has distorted the markets because of that, right? Then Sri Lanka also introduced power. Then what are they saying? Given the acute balance of payment tensions and ongoing crisis, maintaining the capital flow management measures in the short run is appropriate.
Okay.
So in the short run, some of these restrictions may have to be maintained, right? While the import restrictions, exchange restrictions, and multiple currency practices, related measures could help mitigate forex shortages in the near term, they should not be a substitute for the comprehensive policy package and ongoing macroeconomic adjustment, and should be phased out. Should be phased out as the balance of payment stabilizer. So my view is this. So I tend to agree on this. So in the short term, these will have to be maintained, right? Answering the question that I raised, if you allow complete relaxation, where you, as you said, all the vehicles are here, we import all the luxury items, you just name it, whatever you want is imported, then a currency will be under pressure, right? Will be under pressure. So my thing is, so there is a requirement to open up the current account. That is one of the IMF requirements. is that you have to capital account can be strictly maintained.
Yeah, but the current account has to.
Current account needs to be a current account means I should be able to get anything what I want. I should be able to buy a phone.
Yeah.
Shania should be able to say
Buy
get a nice dress, right?
Diamond ring.
Yeah, a diamond ring, and then you should be able to bring.
I don't think Shania would buy a diamond ring. Shania should be given a diamond ring.
Right, and whatever you want. But my expectation is that they will be under pressure to open up the current account. But I think what the government will do is they will increase the duties and the taxes on this, right? So that they will say it's open, but if you want to get your Samsung or Apple phone, latest one, which is 500,000 today, may cost you $1 million. But it's open, you can bring it down.
Fair.
So I think that is what is going to happen to defend the currency. They will have to, in the short to medium term, have fairly restrictive conditions in place.
And you envisage that these restrictions will remain in place or will be gradually phased out
It
over
will be gradually phased
short to
out.
medium term?
I would say it won't happen within a year.
It won't happen within a year.
It won't happen within a year. It will have to be maintained because we need to build reserves. Our reserves are still pretty low.
Yeah.
Right? And so, I mean, at this stage, if you do that, so my thing is it will be phased out, but at the same time, you bring in the brakes through higher duties, levies, and taxes.
I think one of the other things also in this report that people have been talking about before, but something that people have not been paying attention to, maybe not closely enough, is the resilience of the banking sector in Sri Lanka, because the report also talks about the need for banks to recapitalize.
Yeah.
How weak are
That's a good
our
question.
banks, not just the state banks, not just your the four sort of major state banks, but also the private banks? How weak are they? Are they like in free fall? Are they?
No, Sujit, you all must be doing a lot of audits on the banks also now. As PwC.
So I'll tell you. So
What the
I'll tell
ideal
you,
person wants.
Yeah.
so I'll tell you where the problem, my personal view is. Right? Banks are stressed. I mean, there's no doubt on that, and that has been very clearly mentioned here. Right? Banks are under stress. And why are the banks under stress? Couple of reasons. One is 40% of their assets, right, is exposure to the government. Say, for example, all four of you have gone and put, say 100,000 rupees each a deposit.
Yeah. And for example, things like, money that they've lent to Sri Lankan Airlines on the guarantee
So all
of
that,
the government.
right? Yeah. So when all of you all have put 400,000 rupees, what has the banks done? 40% of that has been in return lent to the government, either through Sri Lankan Airlines, either for deficit financing, for whatever
Or
it is.
various projects, etc.
Various projects and so on. They have given it to the government. So there's a huge exposure of the banking sector to the government. 40% is massive. 40% of the assets. Right? In other words, one of your deposits are straight to the government. 1/4. Sorry, more than 1/4. 40%, right? Virtually 2
Almost
deposits.
50,
Yeah,
yeah.
almost 50, right? So that is number one. What is the number two? Number two is, you would have known now what has happened to the couple of banks in the US now.
Yeah.
US banks went down, right? And one of the largest banks, Credit Suisse, taken over by UBS
Yes.
for virtually for nothing. Nothing, virtually for nothing. Why did that
And
happen?
you never expected Credit Suisse is
You
supposed to
never
be a very,
expected. Absolutely. Global bank, right? Big giant.
Yeah, big giant.
So
Why did it
my
happen?
yeah.
That is same conditions are here. What happened was the US rates went up from 2% to 4%. Rates were increased, right, to tackle inflation. We did the same thing. Our rate, which are 6%, the T-bills went up to 30%. So we are 5 times. They were 2 times. What happens then? The government bonds that these banks own, right? So our banks own at the moment, our total, we have banks own about 4 to 5 trillion of these bills and bonds. Total bills and bonds are 13 trillion. About 1/3 is held by the banks. What happens to those ones? Just like the US banks went down, one of the reasons was 2 to 4%. See, some of the banks are holding bills and bonds which are at 7%. Now you have bonds at 30%. So that asset what you are holding has to be reduced in value now, because no one wants this asset, because I can buy a government security at 30%. But the banks are holding at 8%, 9%, 10%. So they have a portfolio of things.
And so I think, Sujay,
so then what happened?
This is exactly what happened to Silicon Valley Bank.
That's happened to Silicon Valley Bank, right? So here what happened was, why the banks are under stress? Then the banks came and said, look, we can't take this loss. Please, so it is like saying, banks got together and say, we are playing a football match, I can't score a goal, can you extend the width of the goal? Goal post, change the goal post, then I can score a goal. So then they went back and said, can you please allow us not to book this loss? That is one reason why the banks are under stress. Second one, ISBs, which were trading at, say, 30 cents to the dollar, 70% discount, right? What you bought for $1, it was available at so that means those bonds also less now. You bought a car for 10 million, some reason your car is worth 4 million. So and they said not to book this. So 3 reasons, right? One is the huge exposure to the state, right? The other one is holding
worthless assets.
ISBs being held, plus the local rupee money. And because of the high interest rates, people who borrowed can't pay. Who can pay
so the debt recovery is also
debt recovery is a huge problem. So our non-performing has gone up. So the IMF have said the banks are clearly under stress. What are they saying under that? They said we want an independent review done. We don't believe in what you are doing, what you are reporting.
So what I'm asking is, Suju, as being at PwC, as at one of the most reputed sort of auditing firms as well, are there any banks in Sri Lanka right now that could go under, like we saw what happened with SVB or with Credit Suisse? Are they, because you said across the board they're all stressed, but are there banks that
you don't have to mention names?
but is the domestic banking situation in a system where, one or more banks could collapse?
So to give credit to Governor Nandalal Veerasinghe, so they have brought in so many measures to support the banks, and the banks have been told, come and talk to us well in advance. Don't wait until you have a run on the bank, because then it's done. There's no way, right? I mean, with these today, within an hour, all of them will be right at the doorstep of a bank branch.
No, I mean, a piece of misinformation is enough to send people running.
So at the moment, no. If you ask me, is there anything that is extremely vulnerable? No. But the entire system, so that's why the IMF have said. So IMF said some important points. First one, independent review. We don't believe what you all have done so far. We are going to appoint some independent people to review all the banks. Right? So they have, first round is about 6 banks, second round is the balance 4 or 5 banks. But it includes Bank of Sri Lanka and People's Bank as well, to be reviewed in the first round, number 1. Number 2, they are asking from the governor or the central bank and saying, you guys give us a plan now, how you are going to recapitalize these banks, because these banks need capital. If you don't have capital, then what happens? It happens to what happened to Silicon Valley Bank. Boom, it gone. Within a day.
You will raise capital at the end of the day.
You need to raise capital. But the problem is this.
To mitigate the loss.
Mitigate the loss. When your interest rates are at 30%, right? Who wants to put money? I mean, our banks today are trading. See, all these banks are listed. No? They are trading in the Colombo Stock Exchange at about 60% discount to the asset value. So it is like, say, this phone is worth 100 rupees. It's worth 100. I'm saying you can buy for 40. A bank share.
So
actual value is 100.
So in this context, what is the actual responsibility of the banks themselves? Because we saw, I mean, not too long ago, 5-6 years ago, banks were reporting extraordinary profits, profits after taxes running into the billions of rupees. How do you go from that to, as you say, well, no extreme vulnerabilities, but being stressed to this level in the space of 5 to 6 years?
Spot on. So couple of reasons. So that is why IMF says we want independently review these numbers to be reviewed. Number one, right? Because they said, I mean, when we met at some point, they said it's very surprising that when the country is branded as a bankrupt nation, right, and that you have financial institutions reporting quarter-on-quarter high profits. So that's not the norm. That's not the norm. So number two, central bank has put in a lot of restrictions. Directors' remuneration cannot be increased. Bonuses have to be restricted. Dividends, there are certain conditions to be put in. So there are a lot of restrictions have been brought in by the central bank. I mean, it's proactive, good that they have done, and saying, look, you got to fulfill these conditions, and they are monitoring very closely the capital levels. I mean, see the amount that you can lend depends on the capital you have. You can't just go and lend, right? So there are very stringent regulatory measures that you need to comply with. It all depends on how much capital, and as you know, the bank's capital is very small because it's run by depositors' money. If you take a bank, if you have if you have put in, Najib, 10 million capital, depositors have put in 100. So your bank size is 110, right? But it's basically 90% is depositors' money.
Yeah.
It's not your money. Even though people think I own the bank,
Yeah.
technically, what you have put in is a very small amount of.
So I think this is where the fear comes from as well, right? Because I mean, people who, normal people who are aware of like what happens when banks go under, where if you're a depositor, you could be. We've seen what happened with several finance companies, right? Non-bank financial institutions. When it goes under, people are left holding on to a worthless card.
Yeah.
Which used to represent almost their entire life savings. So, I mean, you've sort of explained that we're not going to be in that kind of a situation. But I think the worry is for people when you hear terms like domestic debt haircut.
Yeah.
Again, that haircut is basically, it's the banks and NBFIs that are going to have to take that, right? It's against the exposure that they have to the government.
Just to give you a little bit of points, what the IMF is saying on the banking system, they say the things to be done. Completion of the bank diagnostic exercise. So that means look at the balance sheets of these banks, right? Are these numbers actually correct? Number one. Development by central bank, a roadmap for addressing banking system capital and forex liquidity shortfalls. Central bank has to give a roadmap, right? Determination by the government of the size and potential government recapitalization of viable banks. What is the government's plan? See, I'll give you an example. Again, you will know on Credit Suisse. The Swiss government came and said, right? Swiss government came and said, don't worry when UBS was taking over, don't worry about the losses you are going to take over from this bank. We will safeguard you on that. We will look after. If you are incurring losses because of that takeover, we will cushion you on that. So they are asking, what is government's role on this? So, and also, they said one more interesting thing. They said when you are appointing directors to the public government banks, basically Bank of Ceylon, People's Bank, NSB and all these things, you must clearly make sure, right, they have the right qualifications, experience and so on, and not to appoint your brother and sister and relation and girlfriends.
Are you pointing the finger at Basil Rajapaksa?
Not only Basil Rajapaksa, over the last 5 years we've had, how many finance ministers we've had? Mangala Samaravira, then Mahinda Rajapaksa, Basil Rajapaksa, Mahinda Rajapaksa again, Ali Sabri, Ranil Wickremesinghe. That was before. So we have seven
in the last 5 years.
Seven finance ministers in 7 years.
Yeah.
Right? They all did this. They all did this. But now the IMF is saying, please make sure when you are making appointments.
You're saying the
right?
current finance
So,
minister is
what
also
you're
doing the
saying,
same.
what you're saying also raises sort of red flags for me, because it seems to indicate that the IMF has no faith in like the FIU and the monitoring mechanisms in the Central Bank of Sri Lanka. Because if that's what they're saying in their
They
report,
are saying
we need an independent...
reforms of government, state-owned banks and appointment process for directors and senior management also, they are saying. Reforms to governance. See, that is why, this is the first time ever IMF is saying we are going to review a governance process.
Yeah. So, Dr. Kanishmurthy, based on what Sujeev is saying, it seems to me that the government may take a haircut on domestic debt restructuring, or in terms of treasury bills, or which went at 34% to 30% at one given point. Would that happen? If that's the case, what would be the risk for those who have invested money on 3-month or 6-month T-bills?
Well, that is the danger many are predicting when local debt are restructured. The banks are in the danger of collapse in the financial liquidity side. And that is why the central bank always say that when you, they reiterated again and again that the interest rate gap with the treasury bills and the usual interest rate is reflecting the risk premium. So therefore, when the financial markets settle, once the IMF loan or IMF program has been implemented, this risk will fade away according to the central bank. So immediately when the local debt restructuring is done, of course, yes, there is a risk, increase in risk.
No, would this happen? Would this happen? Now, that's my...
Will treasury bills take a hit?
Will treasury bills take the hit?
Will, like people who have invested in treasury, like let's say for example now when the taxes were increased, right? We know a lot of people who are looking for, okay, my taxes are going to increase, I need to figure out how I'm going to start paying for all these things now.
Yeah.
Oh look, this looks like a great investment opportunity. I'm investing in the government of Sri Lanka, government securities, treasury bills, 3 months, 30% interest. Oh, how fantastic! I'm going to put $1 million or whatever in there, and
I'm paying
36% tax anyway. So this will
Why
sort
not?
of offset
That, yeah.
that expense a little bit. Now, are those people who invested in those treasury bills, are they going to be also, like I said,
Yes, if the government
be dressed down?
would like to take a haircut, definitely there will be.
But it's unprecedented, isn't it, for treasury bills to be hit?
If you look at Lebanon, I've read a few case studies on Lebanon. Overnight, the government decided that they won't pay those who have savings accounts in banks. Overnight, and those who have invested money on T-bills at that time, they have not been paid up to date. And I know individuals who are living in Kuwait, who are Lebanese, who are greatly hit by this. Would that happen to Sri Lankans as well? That's the question, Dr. Kanishmurthy.
My prediction is something on the positive side. I don't think that the central bank will allow it or the government will allow it to happen, because if that happens, that will lead to the entire system collapse.
Just like in Lebanon.
Yeah.
Pasan, are you optimistic that even if there is a domestic debt haircut, that it won't affect T-bills?
Yeah, actually I'm also in the side of Dr. Kanishmurthy. However, I can remember one of the research was done by the Verity Research, and they said 3 things. One thing is, if we are not going for any kind of a debt restructuring, that means not for foreign debt restructuring, not for the local debt restructuring, nothing is happening as a restructuring thing. If so, our debt to GDP ratio will increase up to 150% or more by the year of 2032, right? If we go for foreign debt restructuring only, right, we are not going for the local debt restructuring, under that kind of situation, still our debt to GDP ratio will remain at around 120, 130 level as a percentage of GDP,
by
still exceeding the 100%. But if we go for both local debt restructuring and the foreign debt restructuring both, then only we can reduce it to 95% or something like that as a percentage of GDP. That means the domestic debt restructuring is a must. But the Verity Research is not suggesting this haircut thing, even though we have to talk about the haircut at the moment. As he mentioned, if we go for haircut, that will be a huge collapse in the society, and again the banking system will be collapsed. Okay, what happened in the Lebanon, right? People went to the Lebanon banks to take their money back, but what happened? No money was available inside the banks, and finally the banking system was collapsed, and people started to work against the officers of the banks as well. So it was a very unpleasant experience what Lebanon has experienced. So, but I don't think that, as he mentioned, the central bank governor will entertain such a thing in future. But if we can go for the option which is suggested by the Verity research, what they are suggesting is, instead of the haircut, if we can go for 10-year extension of the loan or debt, then that will be better.
So then what happens to, this is my question, right? What happens to retail investors? Like your everyday, let's say, university professor or journalist or like manager at an export company who's been like, oh, my taxes are going up. I'm going to invest this money in treasury bills, 3 months, 30%, great. Will that person be told, oh, look, we're going to be doing moratoriums on these payments, you'll get your money in 10 years?
But we'll continue to pay your interest. They'll say that because the government can print money and pay the interest now. So there is no problem there. Would that happen?
Yeah, definitely at the moment.
No, what I want to know is, and I'm sure a lot of people watching this program.
Based on what Nadeem is saying, it seems that Nadeem will also get affected.
It seems like Nadeem is already invested in tea.
No, I think, Fasan, I think a lot of people watching the program will also want to know, like, are my investments safe?
In treasury bills?
Yeah, are my investments in government securities, if we have to take a domestic, are my investments safe?
I don't think with the past experiences, when we are seeing the strategies what have implemented by the central bank in recent past, I don't think that there will be a safety issue. Central bank will, now at this moment, the IMF suggestions are, as we discussed earlier, little bit painful, little bit hard to accept. But this is the situation in which we need to have a smooth management from the end of the central bank. So for the treasury bill treasury bill investors, I want to say that no need to be worried about the treasury bill investments. Go ahead, because central bank knows that country need to have continuation with no social unrest,
right, so,
to control that situation.
Thank you very much, Pasan. Sujeev, I'm coming back to you. So I happened to read this report almost in full before I came to the show today. And I don't know whether you recollect, Sujeev, last year, people were on the streets asking for a system change in the country. Now, when you look at this report in question, it's very much directing towards this system change that the people envisage. Now, look at page number 151 for an example. It says, in this regard, the fund has been invited to conduct a governance diagnosis of Sri Lanka's anti-corruption framework, and the government is committed to supporting this diagnostic exercise, published in the report by the end of September 2023. Now, this is what the people wanted, isn't it? And through a report of this nature, we've almost got to the bottom of tackling corruption in Sri Lanka. Because if you look at the report, very clearly it says whatever exercise is implemented should be in line with the UN conventions as well. So isn't this welcoming at the end of the day, Sujeeva?
Yeah, so I mean, so just to go back on that, I mean, my view is there will be some kind of domestic debt restructure, right? I mean, that's my personal view. Why? Our debt is simply not sustainable, right?
The domestic debt.
Yeah. See, the issue is this. Our total debt is 30 trillion. That includes ISBs, Chinese debt, treasury bills, bonds, everything what we have is 30 trillion today, right? Out of the 30 trillion, 13 trillion is bills and bonds. But they are rupee, so you need to understand. So it's local, no? We don't have that foreign currency issue on, right? Out of that, 9 are bonds, 4 are bills. 30 is the total, out of which 13 is bills and bonds. 13 split is 9 and 4. Out of the 13, about 3 are held by central bank. That is what is going to be stopped through this central bank is going to be made independent now to this new central bank bill.
Act.
That means no more printing. Central bank cannot, now what they're doing is they are financing this deficit. Right? They are financing the deficit. So as soon as the bill comes through, if it is properly implemented, the central bank cannot finance the deficit. Now what have they done? They have, because of this financing, they have got 3 trillion of bills and bonds. So my view on this is there will be some kind of domestic debt restructure, number one. Number two, who will bear it? The brunt of it will be borne by central bank, because they own 3 trillion. Left pocket to the right pocket. Correct, no? Because otherwise that surplus would have anyway gone to the appropriation, to the consolidated fund. So the first casualty would be central bank who is holding these bills and bonds. Second one, say even still if it is not sustainable, who are the others who are holding these bills and bonds? People like Nadeem.
High net worth individuals.
High net worth individuals, right? HNI,
Definitely not HNI.
right?
Far.
Banks are holding, right? Insurance companies, the life, when you take a life policy, they go and put it in a bill or bond, right? In bills and bonds. Right?
And those are innocent people's money.
Correct. Right? So insurance companies own this. EPF and ETF is a big owner. They own about 4 trillion of the 13. So altogether 13, no? 13 is held, but 4 by the banks. Right? About 3 by central bank. Almost. Then you are at 7. Right? EPF and ETF is holding about another 3 or 4. It's about 11. Only about 2 is held by insurance companies and HNIs and so on. So who will be the casualties? First one, central bank, what they are holding. Number one. Number two, in my view, in the pecking order would be the EPF and ETF. Before going to the banks. Why? As we explained before, the banks are too stressed and too weak to take a hit on a domestic debt restructure. Right? So what would be restructure looks like? It won't be a haircut in my view, but it would be an extension of the term. Extension of the term. Say you have a bond which you are holding for 2 years, they may say I'll pay you in 12 years.
12 years?
10-year extension. If it's a 5-year bond which is going to mature, they may say I'll pay you 15 years.
If the moratorium is going to be 10 years for international debt, you are putting that into perspective and saying this could be for the local debt
But the problem is this, as soon as you do that, right, in the financial statements, there's actually a, see, we all talk about this time value of money, right? The money you have today is far more worth than what you get tomorrow. Correct, no? The money you had 6 months ago is worth twice as much as what you have today, right? So because of that, there's a loss to be recognized. There's a loss to be recognized because what you are supposed to get tomorrow, you are going to get after 10 years. So that is where the issue comes in. That is where the banks then need capital again. Because even though there is no haircut, because there's an extension of the term or the period, there will be a hole in the bank balance sheets. That needs to be plugged. So that's why this IMF is telling the central bank, you better tell us what your recapitalization plan is. So that's my view on that. Right. On the second part you asked, is, see, I mean, to be honest, I mean, you should be ashamed that a third party is coming to, because we did just nothing on bribery and corruption. IMF is saying, we are sending a team to review your process, a technical assistance team, and they're going to fund it also. Saying, make sure your legislation is in place, make sure the right checks and balances there, because you guys just cannot do it by yourself. I guess there's no intention. I mean, we know what needs to be done. The reason is the 3 institutions, Sharon, you're a member of one of those professional bodies, right, is that the police, we have weakened the police, we have not strengthened it, no. Then the Attorney General's Department, and then the judiciary. So over the years, we have not strengthened these 3 institutions. You may remember one of your news items was, the IGP himself said about 6 months ago, for 180 of the police stations, when the OICs were being appointed,
by the politicians, area politicians.
By the area politicians, and he has no say, he's IGP.
He's only appointed 3 or 4.
Yeah, and absolutely, he's appointing 3 or 4. The area politician is appointing the OICs. So you can
All
imagine
political appointees.
all political. You can see the extent to which we have weakened the institutions. So because of that, IMF is saying you guys have simply cannot tackle bribery and corruption. So we are coming in. So this is a good thing. So these are the positive things on the IMF engagement, because things that we couldn't do for 74 years. At least
within 12 months.
At least who is the lady?
200 days.
Georgieva, right?
Yeah.
At least she is able to do
She's
which
able
we
to
couldn't do for 74 years.
Within 200 days.
Yeah, so that is why the president said no. 3 on International Women's Day. He said, I need to recognize 3 women, right? Was Janet Yellen, Treasury Secretary of the US, who was very supportive, right? Sita Raman from the Finance Minister of India, and IMF head. She said, these 3 ladies are the people who helped us, which we couldn't do for 74 years.
I don't know about whether helping Sri Lanka, but definitely helping Ranil Wickremesinghe.
But this is what President Wickremesinghe said, right? It's not me. He recognized these 3 ladies.
So we go in for a short commercial break. When we come back, we are discussing about the IMF engagement in Sri Lanka with Sujeevan Mudilige, Dr. M. Ganeshamurthy, as well as Pasan Vijayawardena. You can still direct your questions to number 076 656 5353. We would be delighted to take those questions to our panelists as the show goes on. Stay connected, stay with Face the Nation. We will be right back.
At least 40% of women coming into parliament. There has to be that equal number as professionals.
I think election expenditure campaign finance is necessary because there are huge sums of money that are spent.
Keep the pressure on the government and on the parliament and the decision makers that enough is enough.
Very good evening to you and a warm welcome to Newsline Live. We're broadcasting, as we almost always do, from the Newsfirst studios in Dorset Street.
Newsline, Monday to Friday at 8:30 p.m. on TV1.
දෙදහස් විසිතුන ගම්මැද්ද කඩිනම් ව්‍යාපෘති මාලාවෙන් මයංගනේ ඇඹලවත්ත පාලම අඹන්පොළ වලලිය මහාවිද්‍යාලයේ පානීය ජල ව්‍යාපෘතිය නුවරඑළිය අපගැන්ලි විද්‍යාලයට විදුලිය ලබා දීම මහවිලච්චිය යායහය ශාලිය මාලා විද්‍යාලයේ පරිගණක විද්‍යාගාරය සහ සනිපාරක්ෂක පද්ධතිය විවෘත කිරීම සිල්ව කැන්ඩි දෙමළ විද්‍යාලයේ ජල ව්‍යාපෘතිය සමීරගම විද්‍යාලයේ පානීය ජල ව්‍යාපෘතිය අනුරාධපුර රඹකැපූවැව පානීය ජල ව්‍යාපෘතිය දෙහිඔවිට වැල්දනිය පාලම ජනතාවගේ ශක්තියෙන් ජනතාව වෙත බාර දුන් බවයි ගම්මැද්ද රට නගන ජනපෞර.
How does a government function without being accountable to the citizenry that it's supposed to protect the best interests of?
And so regardless of people's stances about the elections themselves, they're a basic condition for people participating in society.
Yes, so all of those parties really need to make good decisions.
Yes, we are going through something, but it doesn't mean everything else is also gone. It's just something we have to build ourselves back from.
The People's Platform, every Monday and Friday at 7:30 p.m. on TV1.
Welcome back. This is Face the Nation. I want to start off the final round with the 3 gentlemen. But I want to pose a question to Dr. Ganeshamurthy with regard to this report in question. In the concluding remarks, the report says the Sri Lankan government recognizes that the approval of the EFF alone is insufficient to resolve the issues in the country, that is currently being facing with. So now this is very direct. They're saying the EFF alone is not going to be the light end of the tunnel. What must the government do?
Well, I think I have told this before as well, because the EFF fund, which is roughly around $3 billion US, is not adequate to even see that the light at the end of the tunnel. So it's given for a breathing space for the country to implement these policies, and whenever the policy is being implemented, there can be certain problems with the financing. So to use this $3 billion US to overcome the problems that are arising when you implement these policies. But the repayment of debt should come from elsewhere, and that should come from the expansion of the economy. So the government has to find a way to revamp the economy. So that is the clear-cut message from this report.
So when you look at countries like Vietnam, Dr. Ganeshamoorthy, which has done quite well for themselves, when you look at countries in the subcontinent like Bangladesh, for an example, which has done extremely well, Sri Lanka has to pay $300 million US as a swap agreement to Bangladesh as well, and they assisted us when we were in dire straits. These countries have done well. What is the cue that we can take as a nation from these countries?
Well, I think Sri Lanka has been taken as an example by other countries sometimes back, right? Back. Now we have to take the example from our neighboring countries, even Bangladesh, once poor nation, very poor country, but now they have been able to grant us a kind of a soft loan. So,
but if you look at it now, Dr. Ganeshamoorthy, if you look at Bangladesh, Bangladesh was not tapping into the apparel sector, the garment sector, since of late. They started all these operations very late. Sri Lanka started in 1992, and Bangladesh started building apparel sector companies only subsequently. But Sri Lanka was not able to leverage. So what can we learn from these countries?
Well, Sri Lanka, we can't blame the industrialists in this country, because when you take, as you mentioned, the garment industry, I will take garment industry as well. We started off in 1982, the garment industry. So we have reached to the research and development state, the high-end garments. So the ordinary garment processing mechanism has gone to countries like Bangladesh, where the labor is cheap. Sri Lankan labor is expensive, but we have to use the Sri Lankan labor to produce valuable goods, valuable products. So this is where we are lacking.
So I can give you a classic example, Dr. Ganeshamoorthy. When I used to travel in 2007, 2008 to the US, when I go to a shop and you try to buy a garment, it would say made in Sri Lanka.
Yeah.
And I visited the US in 2020 and went to the same shop, and almost all the apparels that were there in that shop was made in Bangladesh. So that shows how they've expanded as a nation.
Exactly. But mind you that the Bangladeshi garments are produced by Sri Lankan factories over there. So
our factories have opened up
because of taking this cheap labor advantage.
If you look at certain companies in Sri Lanka, we even opened up companies in Kenya, have opened up companies in Jordan, so they're doing extremely well.
Exactly.
Because even the tax policies, even the labor laws are very archaic in Sri Lanka. So everything has to be reformed if you're looking into the future, isn't it? And isn't this the best opportunity to do that, Dr. Ganeshamoorthy?
I think this the particular report can be taken as a kind of a guide to guide Sri Lankan economy to make a business-friendly economy. There are very good proposals in this particular report.
Right.
And if you take this as a positively and take the whatever the takeaways you can take from this report and implement to create a business-friendly environment. And the government is also thinking about bringing more investors into the country. So far, since the last 2-3 decades, we were dreaming of 3 billion, 4 billion investment, foreign direct investment, never been materialized, because investors will come when you create a business climate.
Dr. Ganeshamoorthy, I want to ask you a very political question, because You are an academic. You are the senior lecturer at the University of Colombo. Who can guide the country to better paths, to a better future? Is it the UNP-led Ranil Wickremesinghe government? Is it the SJB-led Sajid Premadasa campaign? Is it the Andrew Kumar Naik campaign who speak about anti-corruption a lot in Parliament? Who can guide us?
Well, I can give you certain guidance from the past. So whenever you take these UNP-led, right-wing governments, they usually have this open economic policy or so-called export-friendly policy, and used to record higher growth rates with investment, high foreign investment and production, etc., etc. Whereas the left-wing parties, like SLF-led coalitions and other left-wing parties, there are times when you look at their market, not market-friendly, import substitution and also national economic policy.
Subsidies driven.
Yeah.
Yes.
So these two policy guidances, one after another, ruled the country. But this has ended in 1994, where the left-wing government took over, followed the same policy. So the PA government in 1994, and it continued up to 2005 with the same open economic policies with a human face. So therefore, that tradition of these UNP-led coalitions and the SLF-led coalitions following different policies ended in 1994. So 2005 onwards, there was another system came in, because that party actually strengthening their election manifesto was categorically said that they were looking for national economic policy.
Right. So do you think Ranil Wickremesinghe, as the president of the country, who does not have a mandate in Parliament, can take us through in the next few months and make Sri Lanka emerge on top of the ladder as far as success is concerned?
I don't want to be too optimistic or rather pessimistic. I will take a middle path. He has been a part and parcel of the UNP government since the inception in 1977 opening, right? He has been he's been occupying various portfolios, and he knows about the open economic policies and also export-oriented development option. Right. So I think he happened to be the president for the next 2 years until the term ends. So during this 2-year period, he can guide the economy towards that end.
Right. So I want to ask Sujeev and Fasan about the way forward for Sri Lanka. Now we have an EFF fund that has been approved. The next 2 or 3 days will be very crucial. We will be getting the money, and then how we are going to spend it will be a big question mark. People should not be engaged in corruption again, and I think the IMF would be having a close watch on how the money is being spent as well. So those are all good news. So what is the way forward? How is this program or this report or this plan going to affect the ordinary Sri Lankan, the exporter, the importer, Sri Lankans as a whole?
Yeah, so I mean, so my view is this. So I think it's time, all of us, we need to give serious consideration to this commitments and assurances that we are given. I mean, it's the time where we leave out the Tripitaka and the Quran and the Bible, and we start embracing this. That is number one. All of us need to know what is it that we have committed, right? So these are things that we couldn't do for 74 years that we need to understand, right? So throw them away and keep this under your pillow, number one. Right. Number two is that in addition to this, right, so this is to make sure that we get out of the balance of payments, foreign currency crisis, our budget deficit, stabilizing the economy. But we need to do 2 or 3 other things as a must I mean, we have no chance if you don't do those things. First one, right, is that we must stop printing money. That is fiscal responsibility. Must. Otherwise, I mean, you need to know that your wealth has got deteriorated by more than 50% in 1 year. All of us. The pensioners and the old people have been taken to the cleaners. Right? Why? Because we just kept on printing money, right, to finance a budget deficit. Number one. So that has to be done. Fiscal discipline. Number two is electoral reforms. If you don't do the electoral reforms, you'll have the same 225 continuing whether you like it or not. You'll have 5-10 fellows who will move out, you'll have the similar set of guys coming in. I mean, this whole thing will just keep on going. So these electoral reforms is an absolute must, as important as adhering to these assurances given to the IMF. Third thing is strengthening the 3 institutions which I mentioned. The police, the Attorney General's Department, and the judiciary. That is for rule of law. Nitiye Adipatya. Without doing that, we have absolutely no chance of. So if you ask me, 3 things that we need to do are those 3 which are absolutely critical. But I need to just also, I mean, inform the viewers that they need to be ready for some new taxes, Shamil. Right? So what are these new taxes? I mean, we have already gone through a huge set of tax reforms over the last 6 to 9 months, right? So by January 1, 2025, we have committed to introduce a nationwide property tax, right? So it's not only for people in Colombo and people who are living in the city. So it's a nationwide property tax, which we don't have right now. It's a property tax, right? See, right now, if you take the rates, Shamil, it's only based on the value of your building that is there. No? If you have a house which is 100 years old, 30 years old, and you have a brand new house on same 20 purchase, the same lane, same locality, the house which is built now will have a much higher rate than the one which is 30 years old.
We have a quick question from one of our viewers. Right. I'm going to pose it to you anyway. Why do you have so much of faith in the IMF document when the IMF track record has been poor and zero success in other countries?
So correct. So the problem is this, we just have no other choice at the moment. We have to embrace this. What is the alternative? There's no alternative, right? We have to embrace this. It's tough. 16 times gone, 9 times completed, 7 times incomplete, right? In my view, because we have no other choice, I believe we will complete this irrespective of who is in power over the next 4 years. Right?
Right.
So just getting on the taxes, so you'll have, so keep in mind, wherever you live, you'll have a property tax that is coming in. This is in addition to rates. So don't get confused with rates on this, right? Next one, a gift tax. So a gift can be anything, no? So gift can be movable, immovable, they have not defined what. So we'll need to see the fine print. What does it mean? If you give jewelry, will you get tax? Or is it only immovable property, right? Then there is an inheritance tax. So most of us say you inherit from your parents something, inheritance tax, right? Interesting point here is, with minimal exemptions, so they have emphasized there will be a tax-free allowance. So they may say first 10 million is free or something, but with minimal exemptions, right? So these are going to come in by end of 2024, by end of next year. By end of next year. So this is in addition to the 36% what you are paying now, 30% for corporates, exporters are at 30%, you know, all those, education at 30%, tourism at 30%. So in addition to all those ones. And then also, we also need to see on this SOE reform, which is one of the critical factors. Interestingly, they have brought in Road Development Authority. Everyone else was thinking Sri Lankan Airlines, CEB, CPC, the normal, you know, the casualties, right? So this time we have brought in Road Development Authority because that is where bulk of the financing went in the past. Right, and bulk of the loans are to fund some of these road projects. So that has been, that's the interesting one. I mean, I didn't expect that to be there, but that has also been brought in. So I think, to answer your question, is that all of us need to understand the commitments made, and I think we must support as the private. I mean, I am someone coming from the private sector. We should fully support this, because we've had politicians and politicians, Chamil. We have hardly had statesman or a stateswoman. You can count the number of people over the last 74 years, because they are career politicians. They will not want the system change that you and I want, because they will not.
But we want a system change in 2019, and look at what we got, will you? Remember.
So that is the issue. No, Shamil, I will share with you.
When you read those mismanagement policies that have been articulated by the IMF, most of them were during this Gotabaya Rajapaksa regime.
So can't help it, because that is our political system. Just imagine, right? In 2019, it was called it was in Sinhalese Saubhagya Idiri Dakma. What was it? That is
Vistas of Prosperity.
Vistas of Prosperity, right?
And Splendor.
And Splendor. 2015 Yahapalane, right? 2010 Wonder of Asia, Asiyave Ascharya. 2005 Subhanagatayak, right? 2004 Yalipubudam Sri Lanka, reawakening under Prime Minister Wickremesinghe, right? 1994 Sameha Samurdhiya, 77 Dharmishta Samaja by President Jayawardena, and now bankrupt nation. So don't believe these guys what they come and tell you, or whether it's in parliament or whether when you invite these guys. This is what they have promised. And what have they delivered? They have delivered a bankrupt nation. So the only hope we have is that we all embrace the assurances and commitments given to IMF. So at least IMF, with the support of IMF and the other donors, we can get out of this rut. But don't expect the politicians to get you out of this rut. It won't happen if we don't support. So I mean, that's my view on this. So I mean, personally, if we all don't get on board and support this, we'll be in serious trouble, right? Far more than where we are, far worse than where we are today.
So when Sujiva speaks about the way forward, I remember this Desmond De Silva song, which says, Sumiri Pane Padamata Gala, Hete Marunat, Hitar Sapa, Alajodi Karala. So that's the exact way that Sri Lankan politicians have acted in Sri Lanka over the last 74 years, Sujiva. So yeah, what are your thoughts, way forward?
Yeah, exactly. So actually, within this discussion, I saw that some of the contexts were limited only to perceive this IMF support as a fund. But I don't think that thinking about or looking at this IMF support as a fund or money is not that much appropriate. We should consider this as oxygen, or this as an energy to do the reformations. Now here in IMF report, they are providing deadlines for us, no? April 2023, we have to present the new Central Bank Act for the Parliament approval, May Parliament approval for the welfare benefits, like that. This one
IMF is governing the country.
Yeah, that is the problem.
That is because our politicians have failed for 74 years. So we must at least now support IMF to pull out us from this rut.
We can come out from the crisis at least from that method. That is good, I think. So, however, something that we miss is this new Central Bank Act, which will be coming in this April 2023, that means the coming month. Okay. So, but however, Dr. Sujiva also will agree with me. Now there is a very interesting debate. Some of the people are saying that Sri Lankan Central Bank should be independent, and some are saying that no, it shouldn't be independent, like that. There is a interesting debate, right? So, however, the people who are saying that Central Bank should not be independent, saying that central bank leadership body should represent the public preference. That means their argument is general public are the people who are electing politicians. So politicians should appoint the leadership body of the central bank. So the leadership body of the central bank ultimately will represent the public preference. That is the argument of the people who are saying that the central bank should not be independent. But in the other side, the people who are saying that central bank should be independent, yes, obviously, central bank is handling the economic stuff, politicians are handling the political stuff. There is a kind of a conflict of interest. So politicians always love to execute the most popular decision, but however, the central bank always love to execute the most prosperous or long-term decisions. I don't think that politicians' influence should be there to decide the exchange rate.
Yeah, but Pasan, when in 1950, when John Exeter was a governor of the central bank, it was very clear that the governor of the central bank should be a man with integrity. And even if a crow flies over the central bank, he should be aware and he has to be taken full responsibility as to what is going on. So the central bank has to be independent wherever, whichever the country is, isn't it?
Yeah, of course.
Yeah.
So look at the 1997 story of the Thailand. So how there was a kind of a currency crisis started from the Bangkok, right? Entire Thailand faced this problem, but by the year of 1999, 2000, they came out from the crisis thanks to the independence of this central bank. So I think that central bank should be independent. That is our argument. So however, there is an interest in debate. So those things should be included in this new central bank act as well.
Right. Thank you very much. Sujiva Mudurage, CEO of PwC Sri Lanka, for joining us this evening on the show. Very vocal as always on subjects related to the country's economy. I initially thought, Nadeem, when you said name a bank which is being audited by PwC Sri Lanka, which is not doing that well, Sujiva would mention the bank, but keeping the ethics and practices of a very reputed audited firm, I think Sujiva did not mention. So thank you very much, Sujiva, for joining us on Face the Nation as always. It's a pleasure to have you on the show. Thank you very much, Dr. M. Ganesh Murthy, Senior Lecturer of the University of Colombo. And thank you very much, Pasan Vijayawardena, representing the Advocata Institute, for joining us this evening on Face the Nation. Thank you very much, Charlan. Attorney at Law, very silent today, Charlan.
Shamir, you were doing all the heavy lifting.
Nadeem and I. Thank you very much, Nadeem and Shania, for joining us this evening. Shania, I just hope and pray that there's someone out there who will give you a diamond ring.
Given these new taxes.
Given these new taxes. And if it's a gift, it will be taxed as well based on what Sujiva said earlier.
So the sooner the better. Time is of the essence.
So I leave you tonight with the quote, as I always do. If the words don't add up, it's usually because the truth wasn't included in the equation. Take care and good night.
How does a government function without being accountable to the citizenry that it's supposed to protect the best interests of?
And so regardless of people's stances about the elections themselves, they're a basic condition for people participating in society.
Yes, all of those parties really need to make good decisions.
Yes, we are going through something, but it doesn't mean everything else is also gone. It's just something we have to build ourselves back from.
The People's Platform, every Monday and Friday at 7:30 p.m. on TV1.
නියම කාට පවුල් 300කට අධික ප්‍රමාණයක් පාසල් දරුවන් 300කට වැඩි ප්‍රමාණයක් පිරිසිදු දියබිඳක් නොමැති කමින් පීඩා විඳිනවා.
වතුර දෙන මාර්ගයක් සලසලා දුන්නොත් ගොඩක් ඉතින් පින් සිද්ධ වෙනවා.
පෙබරවාරි 4 වෙනිදා හෙන්ගමුව ජනතාවට බීමට පිරිසිදු වතුර බිඳක්.
ලබා දුන්නු ජල ව්‍යාපෘතියට අතරම ගොඩක් ස්තුතිවන්ත වෙනවා.
දුප්පත් අපිට ජල වෘත්තියක් ලබා දුන්නා. හරිම සන්තෝෂයි.
ගම්මැද්ද ජනතාව සමග ජනතාව වෙනුවෙන්.
TV for life.